Okay. Hello everyone, welcome to another video session. Okay, like I promised earlier that I'm going to be sharing more insight about technical analysis. Okay, before I proceed, we have to kind of analysis. We have number one, the fundamental analysis, and two, we have a technical analysis. Now, the fundamental analysis is just all about the background, the background check of a coin, the history data of how that coin has been performing, the inflow of cash, how, okay, in a particular season, this is how it always performed. When it comes to this particular season, this how it always performed, in a year. When it comes from this month to this month, the price seems to be falling. When it reaches this month to this month, the price seems to be rising. Fundamental, that is fundamental. It's just all about a background check, a background detail of how a coin has been performing and all that. I believe you've all done your research about technical analysis and fundamental analysis. Now, the technical analysis now, which I'm going to be sharing more detail on, is all just about view things in a precise and detailed way in the chart. You just want to view things in the chart. You just want to see what has been happening in the chart. Okay, just like, for example, you want to buy Bitcoin, but you just want to just depend on the fundamental alone, because the fundamental is telling you that Bitcoin is one of the good coins out there. In short, it's the grandmaster of every coin, and it has been performing so well, so you are interested in buying. But you just want to base your fact on that details, but you just want to go into the chart. Now, this is where technical analysis come into play. For you, go into the chart, you go into the chart, you see how the chart has been behaving, if the price is falling or the price is rising. Now you are trying to draw your support and resistance line to see that, okay, once it reaches this point, this support line, I'm going to buy, and once it reaches this resistance line, I'm going to sell, and all that is all about technical analysis. For you, you're trying to analyze charts, you're trying to bring different form of price action, you're trying to draw different form of trend line and all that. You're trying to use indicators just for them to give you a precise and a precise detail on where to buy and on where to sell, where to enter and where to exit. So before I proceed further, I would like us to understand three things. These three things will guide us on how to use technical analysis. These three things will guide us on how to use technical analysis. So number one, we have, like I explained earlier, we have the market's pattern. Number two, we have the market cycle. Number three, we have the market structure. I've explained the first two earlier in our former video session, that is the market pattern and the market cycle. So the one I did not explain is the third one, which is the market structure. I'm a structural trader. I love structure so much. I love structure too. Most of my trades are based on structure. That is why if you see me sharing most of my charts, you will see that I'm a structure trader. You will hardly notice indicators. Not that I don't fancy indicators. I like indicators also, but it's just that I love structure too much. I love structure so much. I'm a structure-based trader. You know, not that I don't like indicators and all that. It's just that the way I build my kind of trading style, I, I have to build it, in a structure kind of form. I love to see some structures playing out before I enter some kind of certain trade. So if I don't see those structures playing out, I won't enter those trades. Now, okay, that is that about that. I've discussed about market pattern. Now, market pattern is all about market moving either in a V shape or in an A shape. That is where you see the price of an asset rising, rising. Then after some point, it's falling, falling, falling. This is a V shape. Or either the price of an asset is falling, 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 falling deep. Sellers are in control. Now, at some point, it now starts rising, 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 going upward. This is a V shape. Now, for the combination of this pattern is where you see something like this on the charts. You see something like this. You see something like this. Now you begin to see something like this and something like this. Now, if you notice, this is a V shape from this point to this point. So this is an A shape from this point to this point, V shape from this point to this point, A shape like that, V shape, A shape like that, like that, like that. In short, what I normally do with this pattern is that if I'm trying to map out or draw my support and resistance line, I usually go to the daily time frame, because daily time frame give me precise places, give me accurate places to put my support and my resistance line. Then I move to the 4 hour to look for possible entries, or even down to the lower time frame to look for possible entries also. Now get this, I go to the daily to draw my support. I go to the daily to draw my support and resistance line. Then after drawing my support and resistance line, I move to the 4 hour. I move down to the 4 hour to look for possible entries, because it is on the daily I can be, that is one day. You will see it on your chart, is either one day, meaning daily. It is on the daily I can be able to see this pattern forming accurately. Is either V shape, then price go form an A shape, then all of a sudden form an upward movement, like that and like that and like that and like that. Now that is market pattern for you. Then we talk about market cycle on the last video, in the last video session, where we see is that the market is moving in an uptrend, then it will range for a bit, now coming into a downtrend, that is from an uptrend, range a little bit, now a downtrend, that is market cycle. Other market is coming from an uptrend then to a downtrend, or from a downtrend, now it might range a little bit, sometimes it might not range, then to way uptrend. You will notice this kind of movement on your chart. Now the market structure, the market structure, the third one, the market structure. Now if you are talking about market structure, we have three types of structure. Sorry for my handwriting. 3 types of structure. Number one, we have the structural high. Number two, we have the structural low. Number three, we have the structural range. We have the structural high, we have the structural low, we have the structural range. Now there is no any special detail about the structural high, structural low, or structural range. Now the structural high, number one, is still the same thing as our uptrend. The structural low is still the same thing as our downtrend. Now the third one, which is structural range, is still the same thing as range. Now you will get to understand all this. Now if you did not understand uptrend, downtrend, and range, view the last video session. I make a detailed explanation about that when I was making explanation about the market cycle. Now number one, structural high, or which I also call uptrend. Now how does this structural high form? If you notice, in the structural high is where we have the higher highs and the higher lows. If you have been going through that manual, you will understand all these concepts that I'm sharing. Please keep reviewing that manual. Anything you see that are very insightful, even though if it's not from that manual, or anything outside you do on your own personal research, have a jotter, just them down. You will get to understand this thing more better. That is why sometimes I feel like sharing charts. I feel like sharing my tweets, so that as you are studying, you are also getting acquainted with the chart, or not just me alone, but you're also getting acquainted with chart that other people are sharing, so that everything will just not become like a magic. These guys are performing magic, these guys, they know what they are doing, these guys, they have comfort. If you put in the effort, if you put in a detailed study, you too will also understand all these things. You will also understand all these things. Now going back in the structural eye, which is also the same thing as uptrend rate, that is where we have the higher highs and the higher low. Now how does this higher highs and higher lows form? Now from this point the buyer steps into the market. The sellers came, say no, we want to take the price down. You take the price down. The buyer say no, it's not your time for you to be in control of the market. They took the price up. As they took the price up, notice from this point that the buyers took the price up and the seller steps in, we are formed a structural high. Now this is called high. We formed this high. Now why is this high valid? Because as the price was coming down, at this point the buyer steps in, they push the price upward and break this high. That is why we can now call this high. unless price breaks it and goes upward, it can't be called high. It can be called high until if price breaks it and goes upward, then we can now call it, oh, this is our first high, or this is a high, or this is a what, the start of an higher high, start of a higher high. Okay, but for we to get a precise detail on how higher highs and higher lows are different, now when they took the price up, the seller steps in, they took the price down a bit, now the buyer steps in and they took the price up, took the price up, took the price up, and break the high. If you notice, from here to this point, another high is being formed. Now why is this high valid? Because from here the buyer steps in, took the price up, took the price up, took the price up, and break it. They what? They broke it. Now how many eyes do we have? We have the first eye, and we have the what? We have the first eye. We have the first eye, and we also have the second what? The second eye. Now we can now call this, okay, this is our first higher high, this is our second higher high. Now at the downside where the higher low is being formed, once we have this higher high, the first higher high, this structure here, we call it low, becomes our what? Our higher low. Then after that we have this higher high because the price moves over the breaks it. Now this one because our what? Our higher low. Now this, once this structure is being formed, it is to tell us that, oh, the uptrend is about to start, or the uptrend has started already. The uptrend has started. That's when you will see some charts drawing, mapping this trend line like this, and also like this. This is a confirmation that we are in an uptrend. Once you see this high and this high, and you notice this low and this low, that is the confirmation that we are in a uptrend, and price will be going like that, comes down a little bit, it will break this, it will break this. Once it break this high, this is a confirmation that this high is valid. Then we have another higher high here, and at the downside we have another higher low here. That is how comes back, price goes us, break this high again. Now we have another higher high here, and we have another higher low here. So that is how a structural high is being formed. Structural high, sorry, that is how structural highs are being formed. Structural highs, price came down a bit, went up, break this, came down a bit, went up, break this high, break this high, came down a bit, went up, and break this high. Now we have higher high, higher low, higher high, higher low, higher high, higher low. That is how an uptrend is being formed. So let's quickly go to the chart. Let's notice this uptrend. Let's see if we can get something. Okay, I'm just going to go to my Binance app. Sorry, I'm just going to go to my Binance app. I would have loved to use the trading view, because trading view will give us a precise, a precise chart, how these things are being played out. But Binance also do this, for the sake of the beginners and all that. For the sake of the beginners, I'm just going to make use of the Binance chart. I think Binance have upgraded their chart a bit, not unlike before. The chart looks so awkward. It looks so awkward. So I'm just going to go to the market. Let's spot. Then let's search for BTC. Let's use the BTC USDT pair. The BTC USDT pair. Okay, this is the BTC USDT pair. Okay, let's go to the 4 hour. Now for me to zoom in, now this is the time frame like I discussed earlier. If you want to go either to the 1 hour or the daily, either to the 1 hour or the daily, or the 4 hour, or the either to the daily or the 4 hour or to the 1 hour. Now for you to zoom in the chart, you have to make use of this over here for you to zoom in the chart. Now we are zooming the chart. Sometimes if you try to zoom in the chart, you might see something like this. Now these are moving averages. These are moving averages. We call this EMA. Now notice it. Notice this. Let me just explain this a bit. Notice this. These are indicators. Indicators. The first one is the MA. Second one is the EMA. Third one is the Bollinger Band. Fourth one, volume, MACD. We have RSI and all that. These are indicators. Indicators are there to guide us, that they are there to just, to just guide you, especially if you're a beginner. They are there to guide you. Now, if you notice this EMA, this is EMA. Sometimes you will notice this MA. Sometimes it might be MA. Sometimes it might be EMA. Okay, let's make use of the MA. If you notice the MA, how many lines are we seeing? We are seeing about 1, 2, 3, 4, 5. We are seeing about 5 lines. Now look at them here. These are the description of those 5 lines. Now the first line is the MA5, which is this, which is the yellow. Now this looks like purple. MA10, you see it, MA10. This is it, the purple. The other one is MA20, almost the same as the second one. This is it, MA20. Now the one that looks like red is MA30. You see it, second to the last, MA30. Now MA60, which is this green, which is the biggest among all. But I will advise you, if you are making use of this moving average, pay attention to this green moving average. Pay attention to this green moving average. You will see the same thing on the daily. Too, you will see the same thing. But I like to use the 4 hour. I like to use the 4 hour a lot. Now, this moving average is still the same thing. It's just for you to guide you. It's just like you are saying you are making use of the support and resistance line of the support. When price touches the support, that is the buyers will try to step into the market and move the price upward. And when price touches the resistance line, that is the sellers will step into the market. Sorry, this is our support, this is our resistance. Price dance, came down. If price touches the support, that is the level, the buyer will step into the market and push the price up. And if price touches the resistance, that is the sellers will step into the market and push the price down. That is the same thing also as the EMA. Okay, notice from here. Let's take this from here. Price. This green. Let's just take it as our. If price is above it, it becomes our support line. If price is below it, it becomes our resistance line. That's just the work. No special trick. But I advise you should also do your own personal research about this for you to get a proper understanding. If you look, price went above it, it became support. Now, as price went above it, all these smaller moving average confirming it that price has went above it. The buyers steps into the market as price went above it. This is where some traders will love to buy. Now the price went all the way up. Once it reached this point, it started breaking down. The special thing about this moving average is that as price was going up, if you look, as it starts showing, as it wants to signify that the sellers are stepping into the market. If you look, this smallest one, which is this CLO, was the one that showed that sign, reversal, showed this reversal downward, breaking this purple one, breaking this other one, breaking this red, and also breaking the green and moving downward. That's to tell you that the sellers have stepped into the market, and this our green line has now become a resistance line. Now, if you notice, price went down up, but if you look, the smaller averages went all the way up. Some traders will love to buy it, and price went down. If you look, price was going down, and price came up. The green has now turned to our support line, and it was all going all up. If you look, it hasn't breaking the green downward, and Bitcoin price started going. Now, until we see the price of Bitcoin breaking downward above this 60 MA, that is the green one, until we see the price breaking down, then we know that we are in a disaster. But as long as price has not breaking it, we are still, even though if price touches it, Even though if price comes and touches it, there's still probability that the buyers might step in and still push the price, just like what happened here. Price came all the way down as if you want to touch it, and they continue pushing the price upward. That's just the special thing about this moving averages indicator. Moving averages indicator, that's just a special thing. That's just a special thing about this moving averages indicator. Okay, but what we are interested in this particular time or moment now is just for we to locate our uptrend and downtrend. So I'm just going to remove this indicator by clicking here, clicking here, click here. I've clicked it, now it has removed. And now we just want to notice our uptrend and our downtrend. Now when you open the chart, the first thing you need to check is the movement of the trend. That is, sorry, the direction of the trend. The direction of the trend. That is also the same as the direction of the price. Now, what is the direction of the price? If you can see the direction of the price from this point, it was going up. It was going up. Now we can see the direction of the price is moving up. Is moving up. That is, the price is in an uptrend direction. No. Sorry about that. That's my neighbor. I'm just trying to see if I can do this video. This is 8:16. Okay, let's continue moving in an uptrend direction. The uptrend direction. Now if you notice here, what is the direction of the price? The direction of the price from this point, if you notice from this point, the direction of the from this point, it is see the direction, a downward movement. So the first thing you need to check is the direction of the price. What is the direction of the price? The direction of the price is moving upward. Now it will be easier for us to locate our higher highs and our higher lows, or to signify that this market is in an uptrend. Now price came down a bit, went up, came down, went up. We have the formation of high because price breaks it. Price went up, went all the way up. If you notice, we have another formation of high here, higher high, came down, went all the way up. You have this formation of high here, like that, higher high. You have higher high, higher low, like that, because price is in an uptrend. So how do we use this uptrend? If price is in an uptrend, that is, price continue forming higher high and higher lows, keeps going up, we are only interested in buying at every reversal. When I mean at every reversal, this is what I mean at every reversal. Price went all the way up, came down a bit, breaks, came down a bit, went up, break this high, came down a bit. Now I said after two highs is a confirmation that we are in an uptrend. After this first high and this first high, and we're able to confirm this low that is there and also this low that is there, is a confirmation that we are in an uptrend. So from this point, we are only interested in buying. An asset. It comes down. As it wants to go up, we buy. These are our take profits. It comes down. After we must have buying from here, price went all the way up. We took our profits here. Now we wait for the price to reverse a bit. As it reverses a bit, as it starts going up, we buy. We reach our take profit zone here. We took profits, and like that, we are only buying. Okay. I think this is it for now. So as time proceeds, I will discuss about the other two structures, that is the structural low and the structural range. For now, this is all just about the structural Alright, so I beg of you guys to keep studying, keep doing your research, keep learning, keep learning new things, keep learning new things, keep learning new things. So see you some other time and cheers.